Good afternoon and welcome to the XAAR PLC interim results presentation. Throughout the quarter presentation, investors will be in listen-only mode. Questions are encouraged and they can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it received in the meeting itself. However, the company can review the questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. We'll now play a pre-record of the presentation and open up for live Q&A at the end.
Good morning and welcome to XAAR's 2025 interim results presentation. My name is John Mills and I'm pleased to be joined by our CFO, Paul James. This morning, we will provide an overview of what has been a promising start to the year. Paul will provide details of the financial performance before I present an update of our key market opportunities, namely EV battery coating, automotive coating and desktop 3D printing. I will then provide an outlook for the rest of the current year, followed by concluding remarks and an opportunity to ask questions. So before handing over to Paul, I am pleased to say that the group continues to make strategic progress with continued recognition of our differentiated technology in our target end markets. And this is perhaps best illustrated by the 96% year-on-year growth in new printhead business revenue. This was generated from the sale of printheads used in OEM products that have launched since 2019. In H1, 49% of our total printhead revenue was attributed to this new business. The most substantial progress made during this period was in the jewellery wax market. In the first 6 months of 2025, we generated £3.3 million of revenue, up from just £600,000 of revenue for the first half of 2024 and zero revenue in 2023. This clearly illustrates the potential for rapid uptake of our technology once it has been accepted by customers in the end market. In June, we announced a collaboration with SOCAN, a long-standing partner of the group, for the production of the next generation of battery coating fluids. This, alongside our existing partnerships, increases the availability of our unique high viscosity technology in the EV battery coating market. Moving on to automotive coating, where in Q2, another important milestone was reached as XAAR received their first inbound request to quote from a luxury car manufacturer. This provides concrete evidence of demand for our technology. And within the desktop 3D market, we have been encouraged by the demand for a recently launched 2.5D full colour printer, which is being sold at a similar price point to Flashforge's new machine. Sales were a multiple of what was initially expected, which reinforces our belief that the market potential for a well-priced, high-quality 3D full colour printer is significant. Lastly, while EPS has been a headwind on financial performance in the first half of the year, the new management team has begun to rebuild the order pipeline, so we should see the benefit of this in 2026 and beyond. I will now hand over to Paul, who will take you through the financial performance for the first half of the year.
Thank you, John. Overall, we have delivered an encouraging performance. Revenue was £27.2 million, up 7% compared to the first half of 2024, despite a challenging half for EPS and the increased uncertainty that tariffs brought. Growth was generated by our printhead division, which saw revenue up a fifth on last year, and this was largely due to our success in the jewellery wax market, as John alluded to, and an easing of the headwinds from our exposure to the predominantly Chinese ceramics market. Gross margin was stable, just below 37%, due primarily to proactive supply chain management. In addition, we were able to minimize the impact of inflationary salary increases and higher ancillary costs on the overall operating expense, thanks to stringent cost control. Our adjusted loss before tax for the period was broadly the same at £0.7 million, largely as anticipated given the 16% decline in EPS revenue and our expectation that revenue will be more heavily second half weighted. The group remains well capitalised with a net cash balance of £5.1 million. Cash utilisation was driven by increased investment in capital equipment to boost growth and capitalisation of development spend on several exciting projects that will further drive growth over the medium term. Our cash position, alongside the undrawn revolving credit facility, means we retain the ability to deliver on our strategy where additional investment is required. Now, this slide illustrates group revenue performance, with the dashed area showing the performance of the printhead division. As you can see, we achieved an improvement in sales volumes and overall mixed price dynamics across the printhead portfolio, which was partially offset by the weakness in EPS. When it comes to performance at the level of adjusted profit before tax within printhead, we made the strategic decision to secure market share in the ceramic segment in anticipation of its recovery through deepening our relationship with a key large customer. Now, this has negatively affected price variance for this half, but we don't expect this headwind to continue. Despite this, tight cost management drove a 30% increase in adjusted profit before tax within printhead to £1.9 million, offset by reductions in EPS and Megnajet, with central costs being broadly flat. These dynamics led to a first half loss of £700,000. So, looking at the operating results in more detail, starting with the printhead division. Following the disposal of our life sciences business within FFEI, we have consolidated the remainder of that business within printhead, and for the sake of consistency, historic numbers have been restated. Printhead new business revenue has driven growth in the division, with a year-on-year revenue almost doubling to £9.8 million. And as I will touch on in the next slide, the main driver of this growth was the sales of the XAAR 2002 printhead in the jewellery wax market. As revenue from legacy printhead stabilises, as can be seen from our ceramics and glass segments in the chart, we are pleased to see the underlying growth becoming more apparent at a divisional level. Higher volumes and increasing average selling price, as well as strong cost control, led to 30% growth in adjusted profit before tax to £1.9 million, despite the lower like-for-like pricing and gross margin mix impact. Now, as a reminder, XAAR printheads facilitate the use of more viscous, higher quality wax, which enables a higher quality, more accurate product that requires less finishing work and hence lower material loss. The significant benefits of using our technology have meant that from having no revenue just 18 months ago, we now supply printheads to 4 of the 5 biggest OEMs in the market, and we expect to take a majority share of the market by the end of this year. In addition, OEMs are now developing multiple products using our technology to deepen their share of the market. And most recently, in April 2025, a year after launching the WaxJet 510, a single printhead machine, Flashforge launched a second machine, the WaxJet 530, which utilises 3 printheads. Demand for this new product has been almost double the level we anticipated. This meant that in the first 6 months of 2025, we generated £3.3 million of revenue from this market. On top of this, we have started an exciting multi-year process to develop a variation of the XAAR 2002 printhead that will significantly expand our addressable market within wax. Now, EPS is our US subsidiary, which sells print systems utilizing both XAAR and competitor printheads, printing all kinds of industrial and promotional objects such as tools, appliances, sports equipment, medical equipment, golf balls, and toys. As highlighted in the 2024 full-year results, the start to this year was always going to be challenging for EPS due to historic uncertainty in the market, creating order pipeline weakness. As a result of this, coupled with the additional uncertainty caused by US tariffs and the completion of a substantial multi-year project in FY24, revenue was 16% lower than the previous year at £6.3 million. Now, while it will remain a drag on group profitability during 2025, the management changes made in 2024 are already starting to deliver positive improvements. The pipeline is in the process of being rebuilt, and despite the fall in revenue, gross margin rose 3.5 percentage points to 34%, and operating expenditure fell 8% thanks to the efforts to take costs out of the business. Going forward, management is focused on optimizing the supply chain alongside strengthening and widening the customer pipeline to reduce over-reliance on a single customer. The benefits of these initiatives should be realized in the next financial year. Megnajet plays an important role in supporting the sale of printheads through the design and manufacture of industrial fluid management systems for digital inkjet, with the most integrated and compact ink systems in the market today. As a consequence of a process of increased integration, XAAR and EPS are two of Megnajet's biggest customers and represent over a third of Megnajet sales, with a 133% uplift in intra-group transactions year on year. Despite this closer collaboration between the businesses, Megnajet will continue to sell its products externally. On an external basis, revenue in the period was £1.1 million, a 19% reduction compared to last year. And this is a reflection of a slowdown in end markets due to growing uncertainty caused by tariffs. Overall, we are pleased with Megnajet's performance. It remains an important contributor to the group's strategy. Now looking at the group's balance sheet. As I mentioned earlier, we are in a strong position thanks to our healthy cash balance and undrawn revolving credit facility. This ensures we remain well placed to deliver on our strategy without the need for the utilisation of other sources of cash in the medium term. Over the period, we saw net cash outflow of £3.6 million, primarily due to capital equipment investment and development spend on several exciting projects for future growth. This led to a net cash position as of the 30th of June of £5.1 million, which will provide sufficient liquidity when required. Now at this point, I will hand back to John.
Thanks, Paul. We believe there is significant opportunity for our unique printheads across a wide variety of market sectors. However, we recognise the need to focus our efforts on markets where the high viscosity capability of our technology gives the end user considerable benefits in terms of performance, cost and quality. We see these key opportunities as being in EV battery coating, automotive coating and desktop 3D printing. It is our view that these markets represent the most significant opportunity for growth and repeat revenue. We remain focused on enabling the accelerated uptake of our technology through supporting the development and scale-up of our OEM customers' machines. There is a clear value proposition for using XAAR printheads in each of our target markets, thanks to our technology providing solutions to the fundamental drawbacks of the incumbent technology. As we discussed in March, there are OEMs with fully functioning machines using our printheads in each of these target markets. And so most of the heavy lifting for these specific applications, including R&D investment and CapEx, is behind us. As these OEMs continue to launch their products, our focus is on supporting them to accelerate the rate of end user uptake. Given the potential significance of each of these market opportunities, I'll now update you on the progress we have made with each of them since the start of the year, as well as reminding you of the value proposition that our technology brings. So starting with the EV battery coating market, there is growing demand for more powerful batteries to increase the range of EV vehicles. 800 volt battery technology enables faster charging times, but has the downside of generating more heat, which can cause safety issues with the current main insulation method. As of today, there are two solutions used to insulate EV batteries. The dominant PET technology, essentially a plastic film that wraps around the battery, has limitations when applied to the new 800 volt technology in relation to yield, per unit cost and safety. The alternative method is to eliminate the plastic film by spray painting the battery, thus eliminating the issues with the plastic film. But however, this method has significant waste, cost and yield issues that have severely restricted its uptake. Our printhead technology provides a coating solution that addresses the issue with the plastic film and the yield and waste issues associated with spray painting. As a result of overwhelmingly positive feedback from the EV car manufacturers, our partners have all signalled the intent of the battery industry to adopt inkjet coating as the default solution for EV battery insulation. And as the leading provider of this technology, the market uptake could be substantial. There are an estimated 1,300 EV battery production lines in China, which will increase as demand for batteries continues to grow. And with an anticipated replacement cycle of 2 to 3 years, we expect to generate healthy repeat revenue once our printheads are installed. Our product offering has been in the market for 9 months, and we will generate more than $1 million of revenue this year. Today, the only solution for car graphics is either through expensive hand painting or the use of decals. The decals can quickly appear dirty around the edges and are prone to jet wash damage, historically limiting their appeal. XAAR's ultra-high viscosity technology enables high-resolution digital images to be printed on any surface of the vehicle during manufacture. Last year, Axalta and Dürr announced a partnership to provide a digital paint solution combining Axalta's coating technology with Dürr's robotics. With a focus on graphic applications, Dürr, who supply spray paint systems to 50% of car plants globally, have demonstrated this solution to over 20 car manufacturers in the first half of this year. The response has been extremely positive, and they are now in negotiations for the first installations in 2026. And given the unpredictability of when the car industry adopts any new technology, the exact timing of when this opportunity will start to deliver sizable revenue remains uncertain. However, with a revenue generated from a business model of fee per car painted, as well as the rental of the printheads, and approximately 90 million passenger vehicles produced annually, a conversion rate of 1% would generate significant revenues at an attractive margin. The current retail cost of a high quality, full colour enabled 3D printer is approximately £50,000, making it inaccessible to the vast majority of potential users. The alternative is a single nozzle monochrome 3D printer with a price point of between a few £100 to over £5,000. With over 1 million of these comparatively low quality 3D printers sold annually, there is an obvious opportunity for a company that can produce an accessible and high quality full colour solution. Working in partnership with FlashForge, our high viscosity printhead capability has led to the development of the world's first consumer-focused, full-colour, high-resolution desktop 3D printer. With a more direct-to-market strategy than initially envisaged, FlashForge will be selling their desktop 3D printers around calendar year end, priced for the consumer market. As a positive lead indicator, earlier this year, an OEM launched a 2.5D full-colour printer at a similar price point to the FlashForge system. The overwhelmingly positive reaction to this launch, with sales being a multiple of that initially expected, has served to reinforce our belief in the potential demand for XAAR's superior technology. As I hope we've demonstrated, our technology has the potential to transform each of these markets, and if successful, will generate significant recurring revenue. By focusing on applications across a number of markets where the unique benefit of our technology acts as an enabler, we have significantly de-risked the business going forward. As illustrated by the speed at which we have taken over 50% of the jewellery wax market, we believe that these opportunities will grow rapidly once our technology is embedded in each of our target markets. In the short term, our expectations for 2025 remain unchanged. This is despite the introduction of tariffs announced in April, which we will continue to monitor. As anticipated, revenue will be second half weighted, with order volumes expected to grow steadily throughout the year and into 2026. We expect printhead revenue to be strong, although we are hesitant to speculate on the exact timing of orders given the global geopolitical environment. EPS will remain a headwind to group growth as the team focuses on rebuilding the order pipeline. Looking further ahead, our focus areas will deliver meaningful revenue at attractive margins. With this, the future is now closer than ever. In summary, I am pleased that we are now progressing as planned. New business revenue growth is significant, and with the ceramics market beginning to stabilise, the positive initiatives underway over the past few years are starting to drive the group's top line forward. We are aware that there is still work to be done to navigate the uncertain economic environment, and we will continue to make the right decisions to ensure we capitalise on the opportunity ahead of us, both in the medium and long term. There are now fully functional machines using our printheads in our first 4 target markets, and the overwhelming success of our technology in the jewellery market provides a blueprint which we aim to replicate elsewhere. As such, we are confident that our technology will transform our target markets while delivering significant value for our shareholders. The scale of the opportunities at XAAR have never been so strong. At this point, I would like to open up to questions.
Well, that's great. Thank you very much for your presentation. What I'll do is I'll just bring your cameras up now. I know the team want to talk to a few videos and then we'll move on to the Q&A. So do submit your questions now, but I'll now hand over to the team.
Yeah, hi. First of all, thank you very much for taking the time to come and look at the XAAR story and opportunity. As we've been going around this week talking to shareholders, we've been sharing a couple of videos which have been generated by our customers, which I think share a bit more, give a bit more flavour as to the opportunity. So I thought it'd be useful to share them with you today, just on 3 of the applications that you've heard about in the presentation. So the first application in wax, and just to give you a bit of background, so the way that jewellery is made is that you produce a facsimile, a model of the precious metal part in wax by inkjet printing a 3D model of that, and then you encase that wax model in effectively like a plaster of Paris, and then when that's dry you heat it up, the wax melts and it drains out of some drainage holes, and that leaves you with a mold. You then pour your precious metal into the mold, and then you break the mold and you have your jewellery part. And so that is a process by which bespoke high quality jewellery is made, and that market is expanding to adopt this technology. So a few of you have asked about the competition and the sustainability of that market. We can print materials that others can't. That's the fundamental proposition of what we do. All of these applications, we've been successful because we can print fluids that others can't. So there isn't really a price pressure because there is no alternative to using from our printheads. And we see the markets growing rather than diminishing. So with that, let me just play you the wax video just so you can see what that technology is.
Introducing WaxPrint Neo, the latest breakthrough from Uniway technology, redefining precision in jewelry wax printing. Advanced ink recirculation system designed to prevent nozzle clogging for flawless printing. Achieve next-level precision in jewelry casting. Experience mass production like never before.
So that's a video from one of the OEMs who make the machines. They were the second company to adopt the technology. The first company was a company called FlashForge. It took us 3 years working with FlashForge to get them to adopt the print head and actually develop the machine. When they launched the machine at a trade show in Istanbul in April last year, the competition saw the quality and the improvement that our print heads gave and immediately asked us to work with them to adopt, so they could adopt our print heads. And it took them 5 months to get their product to market, which just shows that the business model we have is to really go after a single company in a market sector, get to market with them, and then as our technology gives that market a clear benefit and value proposition, we see their competition coming to us and asking for the head price. What that allows us to do is we're then selling the print head on a value proposition rather than selling based on price. And what we found is that for the second, third, and fourth OEMs in a given market, we're able to demand a higher price for the print heads. So that's the wax market. If we move on to and that's already generated revenue, 3.3 million in H1 this year from effectively zero revenue in 2023. And we're very confident that we're over 50% market share in that market and growing. So we're very pleased with that. If we move on to the desktop 3D, this is a very interesting market. For those of you who know about desktop 3D printers, you probably understand the relevance of this product. But if not, there are 1.6 million desktop 3D printers sold into the the domestic market every year. And they tend to be monochrome or a couple of colors, relatively low resolution machines. If you want to produce a very high quality, high resolution, full color model, then you would need to go and buy a machine for 50 to 150,000 pounds. What we have worked with a company called FlashForge is around developing a desktop 3D printer that will sell in the region of £2,500 to £3,000 that can deliver the same performance as the machines that are £50,000 in terms of quality and not far off the speed. And with the emergence of AI, you can now take a picture of pretty much anything, and there are AI programs which will actually take that 2D image and convert it into a 3D model, and then you can print that model out on your home desktop 3D printer. So to give you an idea of the use case, there is a promotional video that they produced. This video has been out now for a few months, and there is a very clear launch program that they're working through to the end of the year. So if we just play the desktop 3D video. So this is a really exciting product. It's just to give you a sense of scale of the opportunity. If we get 1% of the market, that would translate into 7.5 million of revenue for XAAR in terms of printhead sales. As this is a brand new market, there isn't anything like this out there. It's very difficult to tell exactly the percentage of uptake. FlashForge have indicated to us they believe that it should be in the 1 to 2% level. We will wait and see. We're expecting the launch at the back end of this year, and it's really down to consumer adoption. If you go onto the chat rooms and the promotional stuff that's starting to follow this product, the people who are in those chat rooms are very excited about the product. So look out for this product. You should see it on the market at the end of the year. The third opportunity, which I talk a little bit more about, is around the EV battery side. And there's a few questions there. So on the EV battery, there is no real other printhead. There's another printhead that is in the market, but the limitation on viscosity that they have really limits the throughput and the performance of the machine that's based around that head. So the industry has effectively concluded that our head is the head of choice. In fact, when the machines are putting out tenders, they're specifying the XAAR head as the head to be used in the machines. So again, to give you some sort of sense of scale, there are 1,300 machine lines in China. Our revenue is around about £100,000 per line. So in total, there's £130 million of revenue potential there. So the questions would be, how many of those 1,300 lines would transition to the new technology, and over which period? If we assume 50% of them transition over a 5-year period, that's 10 to 15 million per year. And if they all do over the same period, then it could be 30 million a year. The ongoing revenue would still be there, because once you have your full installed base, the heads will probably need replacing every 2 to 3 years. So there's a continual revenue stream there. And the competition, there isn't another print head that can print at the viscosities that are required to print the special coating for the battery. We have 10 machines now in production. So if you go and buy a BMW car, then chances are that there will be batteries in that car that have got our coating on there. So there are 10 machines producing batteries in production every day. The two real big companies in the battery industry, which is BYD and CATL, are taking their first delivery of their first battery machines in the next month or two, and that really is the kind of critical point. If they work there with those companies well, then we expect and hope to see the industry start to transition in a more standard way. So if I just to show you the scale, the size of the machines, there's a video showing one of the battery lines with our printhead technology in there. So if you could show the battery video, please. Yeah, so just to answer a question posed by Alessandro, which is what, beyond EV batteries and car painting, what are the most exciting growth opportunities for XAAR? I mean, I think that if you look at our revenues from last year for printhead sales was around about 32 million. Growth this year has been strong at 20%, so we did 20 million of revenue in H1, and we expected that to continue to grow. But beyond the 4 applications that we've talked about, that there are another 15 that we're actively pursuing, and there are over 50 applications in total that are at different degrees of maturity. So the strategy that we have is to actually have active projects and products in each of the digital print markets to diversify the risk and give more resilience. XAAR's had a history of being very much a one-trick pony and not being able to stay in a market position. Rather than being a single product in a single market, as XAAR's been in the past, we're very much moving to a model where we now have 40, 50 different applications, which give us much more resilience and long-term stability. And just before we go into answer questions, I just hand over to Paul just to share some comments on the financials.
Yeah, thank you, John. So I've been at XAAR now about 6 months. It's been a great opportunity to really get to understand the business well and particularly understand the numbers. I think what I'll start with by saying is that the consensus profit number, adjusted profit before tax for this year, I'm comfortable with. I think, as we said in the RNS, we're well on track to deliver. The results will be H2 weighted, but that just reflects the growth trajectory that we're on. If I perhaps just talk about margin first of all. So we closed out H1 with a gross margin somewhat slightly below 40%. And it could have been a bit higher, and the reason why it wasn't is we took the strategic decision to support our biggest customer in the ceramics sector. And that sets us in a very good position for when that sector will start to recover in the coming months and years. That notwithstanding, the gross margin percent for XAAR in printhead, you can well expect to be at least 45% going forward into future years. What is exciting about this business model is that because of this value proposition to do with highly viscous liquids, something others can't compete with or replicate, as we go into these new industrial segments, we should expect to be able to charge premium pricing because of the benefits that we do provide to the customers. That combined with increasing volume should further drive margin performance. So that's quite exciting. If I just turn my comments now to cash, we closed the half at 5.1 million net cash. On top of that, we have an untapped revolving credit facility of 5 million. And it was a little bit down compared to where we started the year, but that's for very good reasons. We upped investment in R&D, in development spend, and there are 2 or 3 very exciting projects in the offing which will, when it comes to fruition in a not too distant future, will further boost growth. So I'm very excited about that. So it was good to be able to invest in such things. And we also upped capital investment. And one area that's very exciting is that we make something called waveforms for customers. A waveform is basically a precise formula around voltage and current used to produce the perfect drop. It's very much a tailored solution. And there was a bit of a bottleneck with waveform production. So we've invested in expanding capacity there. And that's a typical example of the sort of investment we're making at the moment. So that's good. If I just say a few words about working capital, inventory historically at XAAR has perhaps been a little bit on the high side. That now is a distinct advantage as we support these launches as they're going to arise. Having said that, I've very clearly stated that I'm a great believer in continuous improvement, and we're setting ourselves the goal of improving stock turn by at least half or 1 turn a year every year going forward. So the efficiency of our stock holding will improve over that period. We also have a tailwind on our debtor portfolio because with the slight changing mix of the customer base, we're moving slightly towards more customers paying in advance. So that's obviously having a beneficial effect on that, on our working capital. So yeah, XAAR is highly cash generative, and we will use that money to invest in further growth. So that's my take on the financials as they currently stand.
Perfect. We'll open up for questions then. Starting with briefing to questions. Paul, how are you using AI to maximise efficiency and productivity?
Well, AI is sort of invading almost every space in business and in our personal life, and well, XAAR is no different. So, I mean, stating the obvious, AI is increasingly being used in the back office for a lot of administrative tasks. You know, stuff that used to take a long time, a lot of effort to produce. You know, I was looking at organizational structures and role profiles with the help of AI only last week. So that inevitably will engender some efficiencies going forward in terms of number of people we need to employ to do those things. But in the operations space, AI is also used for diagnostic testing of our equipment, preventative maintenance tasks, that sort of thing. And we're also looking at using AI, back to that waveform investment I talked about. We're looking at see whether we can use AI to more quickly identify the right waveform for a particular print head fluid combination for a customer, further easing that particular bottleneck in the sales pipeline. So yeah, AI we fully expect to utilize to enhance efficiency in many areas.
And John, what is management and board stock ownership like? How are the board members invested in the company?
Yeah, so if I myself personally, I bought 125,000 shares. Have that. That's then obviously there's the LTIP shares, which is separate to this point. Paul bought shares when he joined, and I think as far as I'm aware, all but one of the board have purchased shares recently. So I think there is real commitment in with the board, real belief in the business, and you know, hopefully as you follow XAAR and see some of these applications coming through, that will be reflected in the share price and hopefully reward those people who've got on board at earlier times.
Thank you. So the wax jewelry revenue is growing rapidly. How sustainable is this growth, and when do you expect the adjacent high potential market to start contributing?
Yes, I think it is a stable growth. I think the wax, the jewelry market is a growing market, and more of that market will move into this type of production method. Interestingly, there is opportunities to further extend that market by the ability to print even lower cost and high performing waxes. So if we are able, for instance, to develop a print head that can operate at a much higher temperature, then we can use waxes that are much cheaper. So digital waxes cost £200 a kilogram. If we could use a standard, regular, everyday wax, it's around about £1 per kilogram. So you could imagine that would open up the technology not just to precious metals, but to other metals for investment casting. So one of the investments in R&D that Paul referred to was how do we actually get a print head that can operate at a much higher temperature, that can actually then generate so that we can actually use this much lower cost fluid to extend the wax market into other metals.
And what is your lead time to fulfill large orders in the electric vehicle and automotive coatings sectors once a contract is signed?
Yeah, so we're very confident in being able to deliver in those markets. We run on an 8-week lead time, so customers understand that. With Chinese customers, it's all payment in advance, and so we run on a very strict 8-week lead time. So yes, just to follow on that, on the desktop 3D, that's an area where we are thinking carefully about how we respond to very strong market uptake. And as I said, if 1% that market would be around about 100,000 print heads, about 7.5 million of revenue. 2% would be 200,000 print heads, 15 million revenue. Today we have a capacity for that particular product of around about 100,000 heads per year, and so if that particular product really takes off, then that's where we're going to need to be able to move quickly to expand capacity. All of the other applications that we have talked about, we're very confident that we can meet the demands of the customers in the 8-week lead time that we call.
And in that 3D printer market, are you involved in machines that can be used in manufacturers' R&D departments, or is it purely for retail use?
No, absolutely. I mean, we've shown a video that kind of really focuses on the retail use, but there are medical applications, there are small business applications, educational. We expect to see this in lots of different areas. But it's interesting if you are into things like Warhammers and these kind of model, fantasy model type games, then being able to print out your own figures. If you have a train set and you want a nice new station building, you could just print one. So I think hobbyists, are potentially really excited. If you remember Airfix kits, you wouldn't go out and buy an Airfix kit. You would just download an Airfix pattern and print it out, and then you have a pre-painted, Airfix kit that you can put together. So I think that the hobbyist market is actually really significant and shouldn't be underestimated. But there is also the non-domestic industrial applications as well.
I actually worked at a business early in my career, Genuit, and they were made heavy use of 3D printing for rapid prototyping. So they would literally think of an idea, print off something as a prototype, see if it worked, and move on. And I know they'd be very excited by this development, the higher resolution, the colour. They'd be very excited, but I'm sure they'll get one.
And in all these opportunities, do you find that OEMs want to try and restrict you to exclusive terms of business with them?
Yes, absolutely. Everybody would like exclusivity. No one can afford it. So we typically do not accept exclusive deals. The only one that we have is in the automotive decoration, principally because supply chain, people in the supply chain for automotive tend to get squeezed, and we wanted to partner with the fluid company and do a deal because they are now talking to over 20 car companies, and we couldn't cope with dealing with that number of car companies. So therefore, we've done a deal with the market leader in the automotive, the paint company. Outside of that, we don't have any exclusivities, and we'd have no intention of doing so.
And you clearly have technically developed products, but given the notoriety around China, how confident are you at protecting the IP of your products? Yeah,
the IP strategy is really, really key. Even if I gave a copy of the recipe book with instructions and what equipment to buy and access to our best engineers, it would take somebody probably 3 to 5 years and £300-400 million to kind of get to the point where we are today. And I'm not sure that people would make that investment for what 20 million of revenue in H1. So I think it's unlikely that someone would do that, and I think it'd be incredibly difficult for them to do it anyway. Also, our IP strategy is really to target the end users of the application. So we have strong IP, and we have protection in through Europe and North America, Japan, where IP is respected. And if anybody infringes our IP, even if they manufacture it in a region that doesn't respect IP, if they then try and export a product using our print heads or using IP from our print heads, then into a Western company, then we can enforce a cease and desist because it infringes our IP from the point of where it lands. So from that perspective, I think one, it's very, very difficult for people to do that, and I think that and we do have very strong IP protection anyway.
And now looking at one of the markets outside of the four you focused on, have you got any update on progress on the packaging markets?
Yeah. So as I said, there are today there are over 50 customers that are developing products using XAAR heads in a variety of different markets. One of them is in packaging, particularly in packaging for corrugated packaging. So here the value proposition is really interesting, because if you print with a pigmented ink today, a low viscosity pigmented ink, it's mostly water, because it needs to be low viscosity, you need to print in the current print heads. And what happens is when you print the ink onto the corrugated, the ink soaks into the cardboard and it takes the pigment with it. So most of the pigment that you put down ends up inside the cardboard and you can't see it. And the net result of that is that you end up with a very poor colour saturation, so that the colour looks really washed out. And to get stronger colour, you have to put more and more ink down onto the substrate. What we've done is we've developed high viscosity inks, and those high viscosity inks, first of all, they have a lot less water in there, and they're much thicker. So when you print it onto the corrugated, it doesn't soak into the corrugated board. So the pigment that you put into the ink stays on the surface of the board where you can see it. And the net result of that is that you can achieve the same colour saturation with 1/4 of the ink. So potentially giving you a 50 to 75% saving on ink cost, with substantially less water, and less water means less drying, less energy consumption. So we believe that as a value proposition is going to be very strong inside the corrugated packaging market. Then there are other packaging projects which I could talk about, but as I said, there are 15 significant projects. That's one of them, and there's up to 50 of other things that are in the pipeline.
Thank you. And our final question for now, EPS, your sort of separate part of the business. How dependent is that on the UK markets, and is there any alternative geographies where you could move sort of tariff to reduce tariff risk?
I mean, the US EPS is absolutely a US market company. The challenge with EPS has been, to a certain extent, tariffs, but there was a very significant contract that we had with a golf ball manufacturer to make golf balls from a company called TaylorMade. So if there's any golfers online, if you look at the TaylorMade balls with the kind of the yellow stripe around the middle, they were all printed on machines made by EPS. TaylorMade ordered quite a significant number over a couple of years. Then they reached saturation, and that contract went away. Unfortunately, during that time, the team really didn't focus on diversification. So when that project finished, it left a sort of a weak pipeline, and that's really affected the first half of this year. We've changed management about 9 months ago, and the new team has really focused on rebuilding that pipeline. So we should start to see recovery in H2 in EPS and into next year. Tariffs have had an impact on the business. It's never really a market share because everyone's in the same boat, and costs have gone up pretty much equally for everybody. So we haven't seen a market share. It's more a question of uncertainty that's led people to delay decisions in buying capital equipment. So I think as the tariff situation hopefully stabilizes and people understand what the final position is going to be, then hopefully that stability will enable companies to start reinvesting in capital equipment, and that will help EPS.
Thank you. And that's all the questions we've received. So I'll now hand back to John for some closing remarks.
Good. Well, first of all, again, thank you very much for taking the time to come and listen to XAAR. We're hugely excited about the opportunity within the business. The capability that we have to print fluids that no one else can really is a game changer in the industry, and the time taken to get people to switch heads is significant. It has taken several years. We're now starting to see the fruits of that labour coming through, and we're hoping that as we move into 2026, as wax has really matured now into a good revenue stream, we should see these other opportunities also start delivering revenue, and that top line growth should then start feeding through into margin and profit growth. So hopefully that's given you a good overview of the opportunity. If there's any more questions that any of you have, please let us know, and we'll do our best to answer them. Once again, thank you very much, and have a good rest of your day.
Thank you.
That's great. Well, thank you for updating investors today. Could I please ask investors not to close this session, as you now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. On behalf of the management team of XAAR PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.